Welcome to The Deep Dive, your go-to source for distilling the essential insights from company earnings calls. Today, we're looking at Sunlands. They're an adult education company, and they seem to be making some really interesting strategic moves.
Yeah, we've gone through their Q2 2025 earnings conference call pretty thoroughly, and it definitely shows a company in the middle of a major transformation, and they've got some pretty impressive results to show for it.
Okay, so for you, our listener, let's cut right to the chase then. What were the big headline numbers? What really stood out from this quarter?
Right, so for Q2 2025, net revenues came in at RMB 539 million. That's roughly US $74.5 million, which is a solid 9.5% increase compared to last year.
Okay, 9.5% growth, pretty good.
But here's where it gets really interesting. The net income, it surged to RMB 126.6 million.
Wow.
Yeah, that's a jump of 154% year over year. Huge. And that pushed their net margin up to a very healthy 23.5%.
23.5% margin, that's strong.
It translates to a GAAP EPS, that's earnings per share, using standard accounting of US $1.31 per ADS, their US traded shares. Really shows financial muscle.
Yeah, you can see why those numbers would grab attention. The market reacted pretty strongly on the call day, didn't it?
It did. Quite robust initially. It really hinted at that underlying strength management was talking about.
Yeah.
It feels like they've found a good rhythm.
Right, finding their groove.
Exactly. And it's not just, cutting costs. It seems to reflect a real understanding of their market, driving this durable growth quarter after quarter. Management kept hitting that point.
Okay, so let's unpack this a bit for everyone listening. Beyond just the strong top and bottom lines, what's the actual strategy? What's driving this performance?
Well, the core story here is this deliberate multi-year pivot they've been making. Historically, Sunlands was very focused on degree programs, getting qualifications.
Right, the traditional route.
Exactly. But they've been strategically shifting, moving towards what they call a three-pillar model. So that includes degrees, yes, but also professional skills, and maybe most importantly now, interest-based learning.
Interest-based learning, so hobbies, personal enrichment, that kind of thing.
Precisely. It's a response to a big shift happening in adult education in China. People are looking more for practical skills, things they enjoy, personal growth, maybe less focused purely on the formal degree.
And you can really see that shift playing out in their revenue numbers, can't you? How much does that non-degree stuff make up now?
Oh, absolutely. It's dramatic. Non-degree programs, so that's the certification, skills, interest courses, they now account for about 77.6% of total revenue.
Wow, over 3/4.
Yeah, and if you drill down even further, those interest-based courses, they were the primary growth driver this quarter. They make up 78% of the total revenue now, and that segment grew over 15% year over year.
So that's where the action is.
Definitely. And the enrollment numbers back it up. Over 300,000 new students just in interest-based courses in the first half of this year alone. And since they started this push in 2020, they've enrolled over 2.1 million people in these interest courses. It's a huge user base they're building.
Okay. This focus on non-degree, especially interest-based, it leads to the really interesting part you mentioned earlier. Who are they targeting with this?
Right. This is where it gets fascinating. They've identified this high potential group they call the silver demographic.
Silver demographic. So older learners?
Exactly. Learners age 50 to 75. They've built this private user ecosystem. We're talking tens of millions of senior users. And get this. Over 1 million of them are paying for full price courses.
1 million paying senior users. That's substantial.
It is. And it's not just about signing up. The engagement is really impressive. They estimate the course completion rate is around 80%.
80% completion. That's very high for online courses.
Extremely high. And the repurchase rate, over 60%. People are coming back for more.
60% repurchase. So they're building loyalty, not just acquiring customers.
Precisely. These aren't just vanity metrics. They point to real long-term value and revenue stability.
So it sounds like it's become more than just a place to learn. It's, a community?
That's exactly how management described it. A meaningful social hub for retirees. Think about it. It helps combat loneliness. People form new friendships, share their passions, all through online forums. And they even do offline meetups.
Offline meetups, too. Interesting.
Yeah. They talked about this multiplier effect. Learning sparks conversation. Conversation builds community, and that community keeps people engaged and coming back. It drives retention.
That makes a lot of sense. Combining learning with social connection, especially for that age group. How does technology fit in? You mentioned AI before. How are they using it at this scale?
AI is definitely a key engine here. Intelligent personalization. They have their own proprietary sauce platform. It's been refined over like 2 decades, trained on billions of interactions in adult learning. So it delivers personalized content, gives real-time feedback, even puts together courses dynamically for each user at scale.
And for the senior learners specifically.
This was quite cool. They introduced a Mandarin voice-activated AI assistant. It understands accented speech, which is crucial.
Oh, that's smart.
Yeah, and it's embodied as these expressive meta humans. So it feels more intuitive, more human, maybe less intimidating than just text on a screen, especially for users who might not be digital natives. Makes it emotionally resonant.
That level of personalization and tech investment requires a solid financial base, though. Can they sustain this? How are the fundamentals looking beyond the headline growth, profitability, cash flow?
Right, the sustainability question. Well, Sunlands has now delivered 17 consecutive quarters of profitability.
17. Okay, that speaks volumes.
It really does.
Yeah.
Shows strong operational discipline and that the strategy is working financially. Plus, they've had positive net cash from operations for 8 straight quarters now. So the cash engine is strong.
And margins. You mentioned the net margin. What about gross margin?
Gross profit was up 12.9% to RMB 469.4 million. And that implies a gross margin of about 87.1%.
87%. That's incredibly high.
It is. Suggests a very efficient cost structure, likely helped significantly by that shift towards the higher margin interest-based courses.
Okay, so costs are efficient. What about sales momentum looking forward? Are new sales keeping pace?
Good question. While the net revenue grew 9.5%, non-GAAP gross billings, which is basically the total value of courses sold before recognizing all the revenue that rose a much stronger 21.5% year over year.
So billings growth is outpacing revenue growth. That's a positive sign.
Exactly. RMB 400.3 million in billings. It signals healthy underlying sales momentum. People are signing up. They also ended the quarter with RMB 814.3 million in deferred revenue on the books. That gives them good visibility into near-term future revenue.
Okay. And operating expenses, are they keeping those in check?
Seems so. General and administrative costs actually decreased by 2%, and product development costs decreased by 9.3%. So while they're growing and investing in AI, they're also managing expenses smartly.
Right. So pulling it all together, what does this mean for you, the potential investor, or just someone watching the company? The market reacted well initially, but then there was some pullback.
Yeah, the stock jumped about 7.9% on the day of the call, August 14th, from $9.36 to $10.10. But then it did give back about 4.3% the next day, closing around $9.67.
Also some volatility. Is that concerning?
Not necessarily about the fundamentals. It's more likely due to the stock's thin liquidity. Volume on the call day was only around 10,000 shares, which is low. And there isn't much analyst coverage. Plus, it's what they call a low float stock. Not many shares are readily available for trading. That can make the price swing more dramatically on relatively small volumes.
Okay, so low float can amplify move.
Exactly. And it's worth remembering the stock had already run up like 89% in July before the call. So some profit taking isn't that surprising.
Got it. So looking ahead, did management give any formal guidance? What should listeners be watching for in the next few quarters?
They don't usually give formal full year or specific quarterly guidance numbers. However, for Q3 2025, they did say they expect net revenues between RMB 500 million and RMB 520 million.
Okay. What kind of growth would that be?
That would represent year-over-year growth of about 1.8% to 5.8%. So slower than Q2, but still growth. Management really emphasized their long-term game plan. Keep broadening the courses, keep optimizing costs, and keep improving that learning experience, especially for the seniors.
So what are the key things to track?
Definitely watch the Q3 results when they come out. Look at enrollment growth, especially in those interest-based courses. Keep an eye on the penetration rate. How much of the total revenue are those courses making up? And watch the gross billings number. Is that underlying sales momentum continuing?
And the user metrics for the seniors.
Absolutely. Any updates on repurchase rates, retention rates within that silver demographic community, that's crucial data. And, continued margin strength as they optimize how they acquire customers. That's key.
Right. And the bigger picture.
Of course, broader macro stuff in China always matters. Consumption trends, any platform regulation headlines, those influence sentiment. But the overall online education market in China is projected to be huge, potentially over 1 trillion RMB by 2027, with online learning growing fast. If Sunlands can keep showing double-digit billings growth and good cash conversion, that could be a trigger for the stock.
Okay, makes sense. Now let's shift gears to our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea. hedge fund style. What have you got for us based on Sunlands?
All right. Given Sunland's really unique niche, the strong fundamentals we discussed, but also keeping in mind that low float situation and the China macro sensitivity, here's an idea. Consider initiating a long position in Sunland's equity ticker STG, but at the same time establish a relatively smaller tactical short position in the KWB ETF.
Okay, long Sunlands, STG, short KWE. That's interesting. Break down the logic for us. Why care those two?
Right. The rationale is this. Sunlands has this specific, powerful story. The pivot to the silver demographic, the high engagement, the AI personalization, the sticky ecosystem. It seems well positioned to outperform based on its own execution.
So the long STG captures that company-specific upside.
Exactly. Consistent profits, high margin, strong unit economics. And because of the low float, any good news or maybe new analyst coverage could really make the stock move upwards significantly, independent of the broader market.
Okay, and the KWEB short, why add that complexity?
The KWB short acts as a partial hedge. KWB tracks a basket of Chinese internet companies. So if there are broader market concerns or policy headwinds hitting China tech in general, KWB would likely go down. That short position could offset some potential losses on the STG long if the whole sector gets dragged down, even if Sunlands itself is doing okay fundamentally.
Ah, so you're trying to isolate Sunlands' specific potential while buffering against general China tech risk.
Precisely. It lets you, the investor, target that Sunlands growth story, hopefully capture its specific alpha while mitigating some of that systemic market risk from China. It's definitely an aggressive play, requires careful sizing, but it leverages both the company specifics and the broader market dynamics.
A nuanced approach. So there you have it, Sunlands. Executing a really fascinating strategic shift, posting impressive financials, really leaning into that silver demographic with AI and community building. It's quite a story of adaptation.
Yeah, the consistent profits, the strong engagement, this growing market niche, it paints a compelling picture. Liquidity is definitely still a factor for the stock's movement day to day, though. Ultimately, for any company like this, showing sustained double-digit billings growth alongside stable cash generation is what the market really wants to see for a re-rating.
Absolutely. And just a reminder for everyone listening, everything we discuss here on the Deep Dive is purely for informational purposes. It is definitely not financial advice. So what stands out to you about this Sunlands story, their shift to interest-based learning for seniors? Do you see this as a unique China phenomenon or maybe a glimpse into the future of adult education everywhere? Send us your thoughts. We look forward to our next Deep Dive with you.